For the last 6 years since working as a financial advisor, the one question I got asked the most is,
"Hey Axel, what is the best investment?"
Some push stocks or ETFs, others push crypto, real estate, gold, you name it. Enough! Let's compare the different investing possibilities one by one so you know exactly what you might want to invest in. And we start with real estate versus stocks or ETFs in this PerFinEx investing video. Both can be very good investments when you're doing it right, but they are also very different investments. So it's important to understand the differences. In case you're wondering what I do with my personal money and if I'm biased towards real estate or towards ETFs, I invest in the stock market for more than 10 years now and just recently bought my first investment property in Düsseldorf. It's actually not my property, I bought it for the community, for you guys. So check that out if you're interested to invest with me in this property. But I would have bought the property for myself as well. So I'm doing both. I invest in real estate and in stocks or ETFs, and I encourage you to do the same simply for one reason: diversification, which is key to investment success. Since I do both, and I like both, let me try to make this comparison as objective as possible. Investing in stocks or ETFs is super easy. You select a broker, open your investment account, buy ETFs, and you're done. It requires very little work, literally a couple of clicks, and you can start. If you want to invest on your own and want to see which broker is the best one, you can use the calculator on our website. And if you want to invest in the easiest way possible, you can join our community investing. Links to both are in the description. Investing in stocks or ETFs is not just easy, it's also really affordable with almost no barriers to entry. You want to invest 100 euros a month? Just go ahead and start a savings plan. 100 euros is not really gonna get you anywhere when you want to invest in real estate. Our community token from GermanReal.Estate I was talking about earlier will have 100 euros minimum investment. But if you want to buy a rental property for your own with 100 euros, good luck with that one. 1,000 euros is not gonna be enough here. But we'll talk about real estate later on. When you set up your monthly savings plan, you can get a highly diversified portfolio instantly. There's ETFs out there that have hundreds and sometimes even thousands of different stocks inside them. So you can buy small fractions of thousands of companies all over the world with just a couple of euros when investing in ETFs. It's insane if you think about it. So go ahead and utilize the chances that are presenting themselves right in front of you. Because our parents didn't have these opportunities that we are having right now. And the last advantage of investing in the stock market, it's liquid. As long as a bank or stock exchange is open, you can buy or sell your ETFs whenever you want. So you have the ultimate freedom what to do with your ETF portfolio. You can increase your savings, decrease your savings rate because there's no bank forcing you to pay a mortgage. You can buy or sell, you can do whatever the f you want, but always at the current market price. And sometimes the stock market is going down. Sometimes even significantly, like last year or in the beginning of 2020. That's just the nature of investing. 2020 and the last year bring us to the downsides of investing in the stock market. It's liquid, yes. It's transparent, yes. But sometimes I feel this liquidity and transparency doesn't help investors, especially in times of high volatility. Because volatility drives people crazy. If you pick up your phone the first thing in the morning when you wake up in order to check your stocks, something is severely wrong with you. Because when volatility increases and your stocks or ETFs go up and down, you will make emotional decisions. The exact opposite of what you should be doing as a rational investor. Next, and that's pretty obvious actually, if you invest in the overall stock market, you will get the overall average return of the stock market, which is over the last 200-250 years, roughly 7% per year. For some people, especially us men, average return is not enough, am I right? That's why some of us take tremendous amounts of risk gambling with hyped up stocks or crypto or whatever in order to have higher returns than the average. Because 7% per year is not good enough. If you want better returns, maybe real estate is for you, because the real estate market is not so perfectly priced as the stock market. We'll talk about that in a moment. When investing in ETFs or stocks, you also have very little control over your investment. You can choose the stocks or ETFs you want to invest in, yeah, But that's about it. If the underlying companies don't do well, maybe because Elon is playing his games, your investments will go up and down with every single tweet. And if the overall stock market is going down, I don't care what you're investing in, your portfolio is going down as well. And lastly, for the downsides of investing in stocks or ETFs, you have to pay taxes every time you make a profit. Sure, you can earn 1,000 euros a year in tax-free profits here in Germany, but everything after that is taxed with 25% capital gains tax. Every time you make a profit, every sale, every dividend, every interest rate payment, everything taxed with 25%. The only way to avoid taxation of your ETFs is to invest under the pension umbrella. Pensions will shield you from taxes in 3 possible ways: tax-deductible contribution, tax-deferred growth of your investments, and tax benefits when receiving your pensions. All details in these videos. While taxation is a downside for investing in stocks, it is a benefit for investing in real estate. You think that you're paying a lot of taxes here in Germany? Too much even? I do too! Luckily, investing in real estate will give you a lot of tax benefits. You can deduct the closing costs, the interest rate that you pay the bank, costs for the property manager, renovations, all kinds of stuff you can deduct from your taxes in order to decrease your taxable income. And not just that, you can also sell your property completely tax-free after holding it for 10 years. When investing in real estate, you can make millions in profits without paying a single cent in taxes. Speaking about profit, while companies can cut their dividends when you invest in stocks or ETFs, like in 2020, when companies all over the world cut about 220 billion in dividends, your tenant has to pay. A tenant cannot just not pay rent here in Germany because he doesn't feel like it. So real estate will reward you with passive rental income. And if you buy a rental property with us that is sold to investors only, it comes with your property management company. So it's really passive. Without a property manager, real estate is not passive. On a return on equity basis, real estate will probably always have a higher rate of return than stocks. Why? Because you leverage with a mortgage. Generally speaking, you invest very little of your own money into a property and get a huge mortgage, which brings your return on equity through the roof. If you invest 10k into a 100k property and that property increases in value by just 10%, you basically doubled your investment. And that 10k value increase is really valuable because that is what we call free equity. Let's say you buy a property for 100k. Make a 10% down payment, so 90k mortgage. Now you pay off another 10k from your mortgage over the years while your property increased 10% in value. Property is now worth 110k and you owe the bank 80k. The 30k difference is free equity that you can use to buy another property, and then another property, and another. You just gotta start with one property and then you get exponential growth pretty quickly. Starting with one property sounds easy, right? But it's actually not. Because real estate has, contrary to investing in stocks or ETFs, pretty high barriers to entry. In order to invest in real estate, you need at the very least 5,000 or 10,000 euros just to cover the closing costs. We're not even talking about a down payment here. Of course, you can also get the closing costs financed by the bank, but then your mortgage rate will go through the roof. So if you want to invest in real estate without putting in tens of thousands of euros, check out our real estate security tokens that we offer on GermanReal.Estate. Earlier, we talked about the benefits of leveraging your investment with a mortgage, right? That brings us to the downside that real estate is a pretty risky investment actually. Everybody says all the time that real estate is a safe investment, but if you think it through, it's actually not. At least in the beginning of your real estate investing career, you have no diversification. So you face the full location risk, vacancies, your tenant can your property if you select the wrong one, and no matter what happens, you always have to pay the bank. Otherwise, they will take your property and put it into foreclosure. So in order to have a great real estate investment, you need to put in the time, much more time than with ETFs. Even if you get help from experts that help you find a property, help you secure a mortgage, take care of the property for you, file your extended tax declaration, there's still some work required from your side. The highest paid work you will ever do if you do it right, paid a lot higher than your job actually, but still a little bit of work here and there. And of course, because we're in Germany and Germany likes its bureaucracy, real estate is not liquid at all. I mean, It depends on the price that you want when selling your property, but usually things go a lot slower on the real estate market than on the stock market. Because it's not just buying and selling with a couple of clicks like with ETFs. You need a notary meeting with 14-day period, the buyer might need a mortgage, yada yada yada. After seeing all the pros and cons of investing in real estate or investing in ETFs, who wins? Everybody who invests in both. I'm a big fan of both. I invest in both, and maybe you should as well, depending on what's right for your personal financial situation. Because you're not me, lucky you. If we can help you to figure out what the right investment is for you, feel free to reach out by booking a free meeting on our website. I wish you great returns in no matter what you're investing in.